So
Technical, I'll call resistance at that. I see the numbers here. It was a beat. Not good enough. 286 versus 266. Slight miss on revenues. As you mentioned, the supply chain snags. So also, you should have got your mortgage yesterday, right? Higher interest rates are not helping the housing market. Let's go to the other housing stock.
yeah.
Go ahead. You got a comment on that?
Yeah, I was just going to say, like, so, in light of the, what we know about housing, and it's weaker, and although the housing starts that came out earlier in this week were not a disaster, but what do why do you think these stocks are holding in there so well? Do you think it's valuation? Because if you look
Yeah.
at
Oh, yeah.
Lennar,
Yep.
the PE is like a 5. So that could be part of why these things are holding in there and not seeing they're not volatile right now. So
Low
and I think
PE value,
yeah,
number
the
one.
PE I think on KB Home, I'm chuckling because I can't believe these numbers, but the PE is a 3.
Mhm.
That's it. Not a 30, it's a 3.
One thing I mentioned, over the years, the pandemic just kind of changed things, and it changed it where people want their homes. Now, I think these guys had a lot of building to do, and I think that they stacked their inventory. I mean, they can't get some of the inventory, but I still think they have orders on the books. And I think that need a new stock of housing in this country. I mean, the families, the big colonials are just I don't think they just are as needed as much. So I think homes became very important during the pandemic, and just people have to afford them now. Lennar had a beat, 516 versus 491. Slight miss on the revenues, 8.93 versus 9.03. So a mixed report out of Lennar. They slammed it to 75. Nothing there for you on the dailies. I was looking a little bit lower at the 70, 73 and a half area. But nice bounce back up 21 cents. You always want to see, something stay in the green, right? On a day
Right.
like this. And then I think if they like the report, well, they don't have much up here until the pair of highs from what's today, Thursday, from Monday and Wednesday, pair of highs. Mark that on your chart, folks. 78.71 and 78.89. So that's our earnings from this morning. And then we have some earnings
Yeah, there's one.
after the close. One more?
Yeah, there's one more note I just wanted to bring up. I find housing very interesting, and I
Okay.
think it's kind of a little bit of the canary in the coal mine. But these are comments from Stuart Miller, who's the executive chairman. He says, and this is kind of a piece of the puzzle that trying to put together why these stocks are holding up. But sales have clearly been impacted by rising interest rates, but there remains a significant national shortage of housing, especially workforce housing, and demand remains strong as we navigate the rebalance between price and interest rates. So that's part of it too, is that there's still a shortage issue, a supply issue for overall housing. So that could also have a little bit, to do with why why the housing names are holding up in a very difficult environment when you consider the raising of the mortgage rates at this point.
Okay. All right. AM earnings. Are you an Olive Garden fan? We're gonna. We're, you like that? You probably. I bet you like the bread, but you look like a pretty trim guy. You got the bike in the background today, or did you ride
I
the bike?
do, I do. Yeah, so the biking is huge for me because on a day like yesterday where we saw the whipsaw action, all over the place, and your head's on a swivel all day yesterday, and if you get caught in a bad trade, or you kind of leave, for the day, and you're not in the best spirits, just biking, even though it's a little bit challenging in New York City, but I do bike every day in the morning, weather permitting, and at the end of the day too, I do about 5 miles in the morning, and same thing, maybe a little bit more at night, depending on how I'm feeling. But
Wow.
I love to bike in the city. It's the best. It's the best transportation, even though it's a little bit hairy, as I see a bike crash here and there. I actually
Be
saw two.
careful.
Yeah, I actually saw two of them in the last week. So You got to do things like wear a helmet and, keep
Be
your head on a
careful.
swivel as well, not only trading but biking.
Okay, in
Yeah.
line at a buck 56, not good enough for Darden restaurants. Sales miss 2.4 bill versus 2.47 bill was the estimate. I mean, what you're looking at here, right? You got higher input cost, right? You got higher wage cost, and people are, maybe if you're cutting down on some of your discretionary spending, you're not going out to the restaurant. So there's a triple whammy for them in line. I don't see them saying anything, any major, but you missed, you get hit, you're down 448. I would have loved to whack it going through 128. Look at all those lows at 128. So that means on a rebound here, I look at 128. What was the low from yesterday? Ooh, the low from yesterday was way up there. But if they want to take this up, first things first, they're, old support, new resistance. If they just try and do a crazy, wild reversal on this one, which I'm not expecting, 130, 120 would be the gap fill. And for me, the next, I don't see a daily low down here. Maybe you could find something for our traders and investors, but below 127, next daily low I see is 123.03. We're ripping north here. I don't know what's going on, but we are up 9.5 handles here. So what a range. That 38.33 doesn't look safe to me. What do you have for me on DRI?
Yeah, DRI. It's funny because I was kind of looking at the same level. That would take you back to a couple weeks ago. I see 123.47. That's a big area for volume at price that we could possibly revisit down to. So this will be an interesting one to watch today, because if you look at some of these restaurant stocks, they've been holding up extremely well. And if this kind of holds in there and possibly reverses, it just shows you, I think that, and you could come up with your own theories about this, but the consumer is still spending on things like this. And it's not only like, so Darden coming into today is above what, the 200-day moving average. Yeah, above the 50 and above the 200-day moving average. Remarkable, how well some of these restaurant stocks have been holding up. My favorite in the space, which I was looking at yesterday, is Wingstop, which is also, a little bit of a play on football season. But I'll tell you, this group has been doing very well. Do you like Chipotle? Because Chipotle's been doing
Oh,
well too.
what a beast. What a
Yeah.
beast. Yeah. Look at that. Trading up near all-time high. I mean, what
Ugly,
the heck?
ugly. Yeah,
Yeah.
ugly reversal candle yesterday, but everything had a reversal.
Do you mess with these high price stocks at all? I mean, for liquidity and whatnot. I mean, that's another thing. I don't know when they're due to report again, but another reason why I couldn't have a long term, or I wouldn't be trying to pick a top in this thing is, they're going, 10-for-1 split or something like that. You know,
Yeah.
it's always something that's possible.
Chipotle, as strong as it has been, it is a really tough name to trade. And, the liquidity, which we could talk about too, we could touch upon from yesterday, which I thought was horrible. But, even in a normal market, the liquidity is really difficult. The stock alone, forget about the options. The options are ridiculous. If anyone's
Yeah,
ever tried
try me.
to trade Chipotle options, it's insane. But it's one of those stocks that, you, in my opinion, like, it's very hard to take any type of meaningful position, because you get trapped in it, because of the liquidity is, even when it's moving up, it's very difficult to get a fill or a price target off of it.
And you know what's also really fun about these option guys is they wait for the stock to open, and then they let it shake and bake a little bit, and then they
Oh,
come in with
sure.
this wide market, and you're like, man, you know, I
Yeah.
want to get in there, I want to get in there. So, all right, but that's it. We did CMG. I mean, it has good support. I would just say as long as it holds yesterday's low, CMG, and then what else is there? Are you a Ruth Chris fan at all? Wow, that thing. Oh, do I got the right stock up there?
What's the symbol for that one? Ruth.
Ruth.
Clearly,
Are
I don't
you?
know that one. Ruth. Oh,
Yeah,
it's just Ruth. Okay.
You never. Oh wow, that
Let's see.
last time I look at this, it's a steak place. Are you a
Yeah,
steak
yeah.
guy?
I am a steak guy. Hey, I'm in New York City. But
Okay.
yeah, when I go out for steak, it's probably not going to be Ruth Chris. But
No, it's
so
yeah, what Lisa would say is they put all that butter on it and
right.
everything, and it's not healthy for you. So all right, let's do one more earnings here, and let me pull up and Accenture. It's not a stock that we talk about a lot. It did when Dennis talks about buying a stock for a penny. I think he was referring to the flash crash when Accenture did trade down to a penny, and those stub quotes, couple other. There's the chart trading up 8 cents. I'm looking at the report. EPS beat of 3 pennies, 257 versus 260. Sales just a smidgen of a sales beat. They approved 3 billion of additional shares repurchase activity. Guidance not that great. I see lower Q1 sales guidance, so that's not so. An okay report. 19,000 shares have traded. What do you got for me on this one?
Tough one. I mean, Accenture, I think, we can kind of talk about some of these companies, that are the big tech names. And, this is one that isn't, the one like a FANG stock, but it's still kind of in that category. It's tech, it's, consulting, it's software, but it looks like so many other charts. And it's in kind of the wheelhouse of, I like to say, oh, it's a good company, but the stock just looks horrible, right? Two different things, right? Between, hey, how a company is, and how they're doing, and whether or not they're a good or bad company, but completely different than how the stock is behaving. And the stock has been behaving
Yeah, horrible.
very, very poorly, and it looks like a ton of other tech stocks right now. Tech software, they look, many of these companies look the same. It actually reminds me a little bit of the Adobe chart before Adobe
Oh,
announced that acquisition. Figma, I think it is who they're acquiring,
yeah,
but
yeah,
they
yeah.
they're in downtrends. Um, very, very difficult, and you don't see anything kind of changing in the report. Which I think for some of these names, some of these big tech names that are in downtrends, you're going to have to see a really strong earnings report or some other catalyst to take these things out of their downtrend and kind of change the tune. But for now, it is what it is. It's a downtrend.
Yeah, I'll just give you what I go to these situations. I just look for the next monthly low, and the next monthly low that comes in at 244.44. Of
Rough.
course, you can
Yeah.
find some intermediate levels in between there, but big red candle. And then on the other hand, what I try and also identify is where would I buy this thing on strength, right? And I don't know if you're going to see 275 today, but you got a pair of highs. 494. That was the high yesterday, 274.94. Your high on Wednesday, that came in at 275.34. So if you're not trying to buy on weakness, you want to buy on strength, I'll look at 275. Let's go to another tech stock. It used to be loved, used to talk about it all the time, but they must be saying something good for Investor Day. CRM. What do you got for me?
Yeah, Salesforce had their analyst day, and I think there was a little bit of positives that came out. I think they were talking up from I'm trying to bring up the note, but I think that they were talking about their margins, full year 2026. Wow, really? 2026. Okay. Adjusted operating margin target of more than 25%, which analysts say is above expectations and alleviates concern on the cloud-based software. 2026. What do you think? You got any predictions for 2026?
Well, this is what I'll say.
Yeah.
It's better than Meta being profitable from the metaverse by 2030.
Is that really what they said? 2000.
Yeah, yeah.
See, that goes, right for me in one ear and out the other. When I hear like, I mean, come on, how can you even say something like that? Like,
For
You
me, that goes out of one account, and I didn't have it. I didn't have it. I mean, now with just leading into this, we
yeah.
got when you talk about the June lows here, Christian. I mean, Mister Softy
Well,
took it out June low.
you know what's interesting here too is because we're you already said it a couple times, but our eyes are already looking at the June lows
Yeah,
for the indices, right? We're just kind of gravitating there as by chance the next support. But so many of these companies, Salesforce, right? And you've got the Salesforce. Do you have the Salesforce daily chart up there? But
you know what? I skimmed over that. There it
yeah,
is.
it's okay, but look at this. It's it's again, it just shows you like the way that I'm categorizing stocks right now: relative strength, relative weakness, and of course, as hard as this market has been, I certainly don't want to be long any names that are exhibiting relative weakness. But this has already taken out the June lows, so
Yeah.
very, very difficult. I would especially, wait for the lows of June to be retaken if I were to even think about a long here. But again, it's just, it's one of those things where you're just kind of shaking your head. Salesforce, what a benchmark name, and that's already through and through those June lows and making new lows. So yeah, I mean maybe it kind of sticks for today, this
Mm.
150 level, but I just, I can't believe some of these names have just, gone through those lows, no problem.
Yeah, and, do you ever hear us talk about overhead supply,
All the
on this
time.
show?
Yeah. I mean,
Yeah, I mean,
absolutely.
it's not just us. I mean, it's Wall Street. You got a lot of people that, 150 to 165. Yeah. Oh, bad CPI data, right? Right back down, new low of the move. So, right now, monthlies here, and also some of this stuff is getting back down to COVID lows. Next monthly low, you guys don't even want to hear this. Cover your ears if you're long
Yeah.
this. April of 220, your low was 130.04. Better, I got a better number that might come into play today. And that's coming in on the upside for traders. And once again, I don't know if they just put these double tops in here to make it easy for me to recognize. But 53.30 is was the high yesterday. Then you got another high at 53.54. So if the Bulls really want to take this up today, do some damage, fill that gap up to 154.31. First things first, let's get through that 153.50 area. Spoo's still staying green, but they're moving, man. They're chopping around up six handles at 12 and a quarter. I'm kind of on days like this, we can talk about the earnings, we can talk about the Fed. You don't get as much talk about analyst ratings, but we did today. And did you have one you would like to? I got one that I'm going to talk about. Do you have one that you would like to cover?
When we look at the analyst upgrades and downgrades list, what I'm what I'm seeing is I see like two or three upgrades. Um, Today it's not that bad in turn. I'm trying to come up with something positive here, but I do see more downgrades again. I'm trying to come up with something positive. But it's kind of been like this over the last few weeks where there's like very little analyst upgrades and analyst upgrades, and it's just a lot more downgrades. And the initiations are kind of mixed. I have one that is not on your radar. Here's a positive for you. All right.
Okay.
Um, Now this is one that you may not be familiar with, but I
Okay.
find has been showing all kinds of relative strength. Right. So this is Constellation Energy, CEG. Right. They are a play. This was holding up
Oh,
extremely well because they're one of these companies that is doing some nuclear, some hydro, wind, solar, right? So they're kind of their power generation, not exactly like a little bit of a different name than a utility. It's kind of a sexy utility, right? Their power generation, and they're in that niche of getting into some nuclear energy. They had a headline the other day saying that they're what they're doing on the nuclear side, they were at full capacity over the summer. And Guggenheim, who has a buy rating on them, upped their price target from $92 to 121. Now you look at this chart, which
Oh,
you
the
have it on
cost.
you have it on
Yeah.
your screen, right? You're like, hey, this market must be doing pretty well. Look at the CEG in an uptrend. When it does kind of come in a little bit, the dips get bought. But since this name reported good earnings, it's been up and away.
Yeah, I mean, these are the kind of charts where you got a seller, right? Just about they probably are targeting 90, right? Because you had they don't want to show the huge offer at 90, but they got the little algo, and once it gets over 90, they pip, take out the bid. So you got a 90.18 high from 2 days ago, 90.09 yesterday. Bouncing off the low, so good support at the pair of lows at 87.40. What I try and do when I'm tracking stocks like this is what's the all time closing high? What's the best mark that Christian Fromhertz got on his long position? I don't know if you're long it, but that was 89.36. So that's what I'm keeping. I'm keeping in my mind today. It's definitely a number that's been traded through on more than one occasion, so you can't put a bunch of stars on it. But 89.36 and then 89.18. So, or 90.18 is the actual all-time high for a new stock here. Did it reorg or something? Because I see this saying this has been straight up since it IPO'd. Or was
Yeah,
it like
it's
another
it's very
stock?
strong.
Yeah.
I think somebody was mentioning to me the other day that they thought CEG was a symbol for another company. It could have been. Yeah,
Yeah.
they may have, right. It's ringing a bell for you, I think.
Yeah.
Yeah, yeah. But
Uh,
yeah, this is new. Yeah, this is a newer company, I think. But yeah, I mean, it's been this trend in this thing has been strong. See, I told you I'd find something positive that
I
we
got
wouldn't
something
have found.
positive too. Let's just
Okay, what
be
do you got?
we got to be positive here. And my positivity comes out of UBS, and they upgrade Lilly, uh, Eli Lilly, and they upgraded it, and they got a $363 price target on it. Let's see. Bad day yesterday. We're still above the June low, up 7 sticks on 9,000 shares. Oh, I'd have to take first things first. If I had this, or I was looking to fade the upgrade or take profits, let's see what happens at 306.52 for you, Lily traders. That was your 3 day high. Your close just below that at 305.09. So that's what we're looking at in Eli Lilly. I just new low of the move yesterday. I mean, you haven't even taken out yesterday's high yet at 04.53. Not buying it, not chasing it, but there is potential resistance area. And if you want to fade this one, keep an eye on the open. You get that opening print, you maybe go up another 50 cents, and then it come back down through the open. So that is what I'm looking at in Eli Lilly. So I think that's gonna be it for the upgrades in the downgrades. And
Yeah, and we just had initial jobless claims come out for the week. Just the weekly number, they came in 213 versus 217. I mean, pretty in line with expectations. Again, we're not seeing that jump or anything majorly change in the labor market so far. So do we want to talk about the elephant in the room? Do we want to talk about
yeah,
this little event that we had yesterday?
yeah, why don't let me see here. Let me go and do we have Blue? Let's Aaron, could you roll the intro for Blue and bring him on? Because from the CME, we got the economist who tried to warn us a while ago. Aaron, can you bring him on? And I don't know if do you have access to that great intro we have for Blue? My man Blue.
Good morning.
Dennis is out today. I want to introduce you to Christian Fromhertz from Tribeca Trade Group. And he's much more of an economist than I am. Okay. But so I'm going to let him throw some questions at you. But uh, give us the top down here. And I just want to acknowledge several months ago, I wish I would have wrote this down in my notebook. You said, man, it's going to take a while to fight inflation. It's going to take a while for it to show up in the numbers. So, what do you say? What do you think about what the Fed did? And let's talk about moving forward.
Well, the Fed did pretty much what the market was anticipating over the last month or so. They gave us a 75, but they gave us some additional tough talk at the press conference. And so I think that's what's really got the market over the last couple of months. The federal funds futures has increased where they think the peak rate might turn out to be. It was actually below 4% a couple of months ago. Now it's more closer to 4.5 or so. So, we got a tough talking Fed on our hands.
Okay. All right. And I sent you that note earlier about the school lunches, and you didn't find much into that. That
No,
maybe any kind of seasonal things that that could help us out moving forward.
I don't know about seasonal things, but the Fed is going to be very focused on what the data is going to be in early next year. I mean, that's when, there's no big deal about a 75 basis points now in the next 75. But what really happens in early 2023 is they got to decide whether they top out, in the low fours or whether they're going to go to 5 or 6%. And that's going to depend on where the data is then. We get a lot of data between now and then. On the inflation side, I mean, I'm in the camp that headline inflation is going to come down a little faster than most people think. That's almost a consensus view now. So I guess people are thinking that. And then, but the core is going to be sticky, and we know why. It's rent. But rent is calculated, it's 40% of the core. And it's calculated based on lagged home prices, and then they impute a rent based on what mortgage rates and home prices have done. So it's going to be sticky, and it's going to be way above the Fed's 2% target. But we will already know that the Fed has punctured the housing bubble. I mean, mortgage rates are more than double. The housing market's coming off the boom. I mean, so if you're looking at core, but you're failing to interpret it, I don't know. So, I think it's still up in the air what the Fed does when they get to early next year, whether they'll be as tough as they're talking now. It's a debate.
Christian, you go at 'em. I think, yeah, I took one economics class. I bet you took more than one.
Well, it's nice that it's nice to go back to those economic times. But yeah, I mean, so I have a question too. I mean, but that's a great point. I mean, they're going to be data dependent, and we just don't have all the data. And you're absolutely right with housing. It's going to take a while before that kind of washes through the system. But here's what I thought was interesting yesterday, that there's so many other factors that are going on, but they're adamant about getting the rate back to 2%. Doesn't that seem like mission impossible? Like, I would think that they would have moved that up to say, okay, let's try to at least get this thing back to, like, let's come in the middle of all the circumstances that we're dealing right now, and maybe like, hey, well, let's try to target back up to like 3%. But do you think that's possible? 2%?
Well, 2% is possible, but it's not probable.
Right.
So I'm with you on that. And a couple of years back, they were talking about raising the inflation target and averaging it in a way that it could be higher. And now all of a sudden, this 2% number that I think Professor Milton Friedman wrote on the back of an envelope somewhere in the 60s is our target. And it's really an interesting target. But I think there might be some flexibility if we know we're getting there. We really have to feel like it's progress. And the latest data is just the core rate still is too sticky, and the headline's coming down, but it's pretty slow. So we just have to wait and see if we make some progress. But Joel, I have something for you here.
All right.
I've been trying to interpret how the equity markets respond to higher bond yields. We call it a hurdle rate or whatever, but bonds are competitors to equities, and 3.5 on the 10-year is a pretty competitive rate now. But I've looked at the equity markets and the where we are year to date and so forth, and I got to tell you, it's mostly reacting to the higher bond yields and not yet reacting much to fears of recession. There's a little bit in there, and I know the pundits talk about it a lot. But when I do the math, most of the equity sell-off is the inverse of what's happened to bond yields, and it's not really factoring in what a recession might look like in 2023.
23, yeah, and I mean, we get to that point. I mean, once again, though, I look at the what's the unemployment? How can you have a good full blown recession without much higher unemployment?
Well, you can't, and that'll be an interesting thing for the NBER, the National Bureau of Economic Research, has this committee of really well-known economists that meet and decide whether we've had a recession. It's always backward looking. But we might get 3 quarters of negative GDP. I mean, this third quarter, when we get all the data in September, it could easily go to minus 0.2 or 3, nothing big or anything. And then at the same time, the unemployment rate's under 4%, which has only happened 12% of the time in the last 60 years. So obviously not a recession on the labor market. And you get that confusing data because, like you were talking about, the weekly unemployment claims, they are really low. Companies don't want to lay off workers because they're having trouble keeping them and they're having trouble finding them, particularly in the leisure and hospitality sector. And so you're going to get some layoffs, and we've seen some high profile ones, but they're not that many so far. Because the companies that are still trying to hire, they're not going to be laying off anybody. It's a tough market out there, particularly at the entry level jobs.
Okay. Also, I just wanna go back here, and it's hard to do revisionist history and stuff, but what do you think like the interest rate environment would have looked like if we wouldn't have had the pandemic?
Oh, that's a really interesting one. I don't think we'd be quite where we are today. I think the Fed would be raising rates, but not as aggressively. I mean, in the middle of the pandemic, we provided from both administrations about $3 trillion of fiscal stimulus. And if we had provided that fiscal stimulus and the Fed had not bought $3 trillion of treasuries, we would have gotten higher treasury yields in the pandemic. And then we wouldn't have gotten the housing boom. So, but if you go back to 2018, that was when the Fed was actually doing the first very modest QT. It was raising rates. And then when the equities swooned, the Feds backed off. So I think the Federal Reserve would have been raising rates if we hadn't had a pandemic, but nothing like what they're doing now. And we wouldn't have had the inflation we have now because we wouldn't have had the $3 trillion of stimulus.
Yeah, and go ahead, Christian.
Well, yeah, one thing I was just going to mention, I mean, it's a really interesting point, and the whole dynamics right now of what the Fed is dealing with, so you bring up a great point about the job market, and exactly like what we've seen so far in terms of layoffs. Like Goldman, announced, I think it was last week or the week before, but you got to go back to pre-pandemic to realize like that's what Goldman would do every year is they would cut a certain amount. Like, so it's very regular, but we just haven't been exposed to it the last couple of years because companies did want to retain their workers because of the uncertain environment. But Goldman is basically just going back to what their normal course of business is, which is to lay off workers every year. They lay off like the bottom 5-10% depending on the year, depending on like their market circumstances. There's less IPOs right now, so of course they're going to lay off more in those business segments that are underperformers right now. But it's really just the normal course of business. We might see that change in the next couple months, but it's been, to your point, it's been a super tight labor market. Nothing has changed with these weekly numbers that are coming out in terms of jobless claims. So very interesting.
Yes, and a lot of people, I think incorrectly, but a lot of people use the labor market to forecast inflation. And they disconnected over the last 3 decades. And so just because the labor market's tight, sure, you get some hourly wage rises, particularly at the entry level jobs. But I don't think the labor market is much of a cause of inflation. I really look back at all that stimulus that occurred during the pandemic. And by the way, we're not doing that stimulus anymore, and the Fed's reversing course. So, we just have to let that impulse feed through. And, okay, it takes a couple of years, but it will go away.
We're on the line with Blue Putnam. He's the chief economist over at my old stopping ground, the CME. Oil, we're getting a little relief in oil. We've seen that come back. It's been pesky and just really trying to find a home in the 80 handle. And I've looked at some of these commodities, and the crop reports were not good as far as available acreage. Where's the relief going to come from? Where are the components? What should we be looking at to say, man, they're making at least a little dent in that core inflation?
Okay, well, the commodities, they're pretty much all off their peaks by 20% or more.
Hmm.
So that'll feed through it's already feeding through into headline inflation because oil prices are off and gasoline prices are back down. So that'll start feeding through. I thought you were going to ask me when the commodities would go back up. Uh,
Well, when are the commodities going back up?
But there are two things that have really been big headwinds for commodities, and it's the strength of the US dollar and the weakness of the Chinese economy. So that Chinese economy is demand, and the dollar, most commodities are a dollar hedge. And so when the dollar is strong, you don't need to do that. Um, and so, but the Fed is still leading the pack. So, the dollar strength is probably here with us for a while longer. Uh, the Chinese economy, I think, will come back a decent amount in 2023. So we'll get some lift for commodities. By the way, when you're watching those crop reports, they planted a ton of acreage, particularly soybeans and a little bit of corn down in Brazil. They're going to be exporting more. So it's not just a U.S. story
Okay.
there.
Okay. All right. Good. Looking at beans in the teens, right? That haven't been able to say that too much. Looking at chart there. So, I mean, I know it's hard. I know it's hard to be a forecaster and be an economist, and you tempered us last time, and maybe we didn't listen as well as we should have in class, but give us your assessment again of when if ever, is we're going to maybe see a good CPI number, because really that really like seems like the only thing that matters in this market.
Well, I think the headline numbers continue to come down a couple of tenths every month, so we get it October 10th. But that's the stickiness on rents means that the core doesn't come down; it just stays where it is about. So we may not get the real good news that we want to see on the core till somewhere in 2023, and that's where you've talked about the Fed being data dependent. Data comes with a lag, and the data is impacted with a further lag. So if you want to drive the car looking only through the rear view mirror, if you're in Iowa, that probably works. The roads are pretty straight. I wouldn't want to be in Switzerland and doing that. And we're in a pretty rocky territory here. So data dependency has its drawbacks, but your hindsight forecasting generally is pretty good.
All right, Blue Putnam from the CME. Christian, you got anything else for him?
Well, he mentioned agriculture, and I don't know if you're looking at. I think wheat looks really interesting here too in terms of a commodity. I don't know if you're trading some of the ag plays, but I do like what he said about the hindsight 2020. That's that's very good about economics, because that's how it always is, right?
Yeah. All right. Well, we're Blue. We're going to let you go. Thank you very, very much for coming on. It's always great insight, and we'll try and keep our head above water until next time. Christian, man, I can't thank you enough for coming on today. Just your insight into the markets, and your voice, and I get to actually talk a lot on the show. What I hope Triple D's not listening. He knows that. Actually, his mom tells him he talks too much too. But
Yeah.
anyways, any final thoughts before we let you go and get ready to do your homework?
Yeah, final thoughts. Thanks again by the way, for having me on. Really enjoy it, and it's always a pleasure to chat with you guys. But yeah, final thoughts. I would say, watch just the price to me is very important, and you'll find that all of these things that we're talking about. It's a very complicated world right now. The employment, the housing, and so forth. Watch what's going on in terms of the price and the trend of the S&P. watch in terms of, names, individual names. A lot of times the individual names will bottom before the indices. So these are all things to kind of keep an eye on as we're going along. Remember that September is playing out as it normally does, and especially in terms of a mid-year, midterm election year. It's always the weakest month of the year. So it's playing out right now. Start looking at the end of the year, paying attention to what names will bottom first and showing that relative strength. I think that's going to be most important. And then if you want two other things to watch, especially if you're, if most of Benzinga clients are equity traders, the two things that you have to have on your charts at all times or somewhere like the side of your screen is what the US dollar is doing, which is
Uh-huh.
breaking out to all-time highs, and what, as Blue said, what interest rates are doing. Very, very important, because those are the two headwinds that you have right now, and that's been the two headwinds for all of 2022. So those things, once those things also begin to turn, you might see that effect starting to turn as well in equities. But there's been no mistake about what yields have been doing for the last 2 months. They've just been going higher in a straight line. That needs to change. So that's a couple comments, but I wish you guys a great trading day ahead. And thanks again, Joel.
All right, we'll drag you up and once again to do this. So thank you very much, and Christian Farmhertz, Tribeca Trade Group, bringing his wisdom to the pre-market prep show. Thank you very much. All right, let's what else we got? We got some earnings after the close, and so let's take a look at them. I mean, I don't know what are you expecting out of FedEx, people, right? I mean, they came out, they told you it was going to be bad, right? Who was the company that came out? They said it was going to be bad, and then they said it was going to be worse. Wasn't that Walmart that did that? But anyways, couldn't even take. You took out the low of the move. The market didn't help it yesterday, and I mentioned this before. You don't see it too much on a monthly chart, but
Can
there
you,
is a.
hey Joel, can you share your chart again?
Oh, it's okay. Hey, thank you, producer Aaron.
No problem.
Boom, boom, boom. StreamYard, share link. You guys just don't want to see me. We're talking FedEx here. You can see this name. If you own the stock, you probably don't want to see the chart, but there you go. You got a gap here on the monthly chart, so I'll just give that as a target here. On the downside, that gap goes back to June of 2020. Probably one of those rip roaring days on July 1st, but the gaps between 149.99 and 143.56. So get out there, maybe get out there at 150 if you're looking for a gap fill on that one. Also, if you're just looking for just a number to keep an eye on, as you do as stocks continues these kind of moves, is the low close of the move. And the low close of the move that came yesterday, 153 and a quarter. Trading up 56 cents, not much activity in the pre-market. So if you feel like you have to own it, see what happens at that close of 53.25. That's your lowest close going back, as I said, all the way since June of 2020. What else have we got? Also, after the close, Costco. Nice support here if you're looking to buy this on a dip. Don't know if you're going to see this lower 493 handle because it moves pretty well with the market. Already trading up 293, but I'd keep an eye on that 493 area as possible support on a bad report, or if reversed today. On the upside, minor. Yesterday's high is way up there at 506.43. And that was a closing price, and as well as a high that you had on Monday. So I would get, if you get a pop here, I mean, it could pop $10. I don't know about today, but maybe off the report. Just keep a head on a swivel there at 506 point. Let's just call it 506.50. So there is a couple of reports that are after the close. I'm trying to. We're going to stay on a little bit longer today, and I'm trying to dig up a special guest here to come on at just after 9 o'clock. I'm trying to get a hold of him right now, but it's someone that you guys all really like, and has good insights into the markets. And plus, we haven't talked to him in a while, so I'm waiting for confirmation. That's going to probably be coming up at 9:05. But hey, it's 8:53. I'm going solo here, so I'm gonna go. I'm gonna go a little bit early to some ticker time. And I saw one up here real early. Adnan, I want to know what you've been dipping your toe in because you always seem to pick them pretty good, and this has been a tough market. But the first one I want to examine is Domino's Pizza. Does everybody know where Domino's Pizza is based? Does anybody know in the pre-market prep chat? Does anybody know? I've said it 1,000 times on this show. Maybe you guys just don't pay attention. What's my favorite town in the world? Ann Arbor, Michigan. That's where it's based. It's flat today. I could say it. It's on. I could say it's on support, right? And this is monthly support. You have to go back here a little bit lower. Boom. So if you're staying on the long side here, and you risk it $13, right? Jesse Hernandez got it. That's Michigan. Nope, not Detroit. That's Little Caesars Pizza. But this you had a monthly low here at 319.71. The first things first, that June low is right there too, 321.15. So that whole 320 area, that's major support. So that's what you're hoping that it doesn't go there. The low of the move held up okay yesterday at 326.82. The low at 30.56. So let's see, maybe build a couple. Did make a higher low yesterday, so that's good. Maybe if you're looking to pick it up on the cheap, yesterday's low is 30.56, and if you don't want to ride it all the way down to 320, then you can lean on the low of the move. Let's see. Adnan says, "Hey Joel, I'm stuck in Dish at 16.41." All right. Who just popped on here? Let me see. Aaron, are you back there?
Yeah,
Yeah.
I think it's your special guest.
Okay. He came on a little bit early. Okay.
You want him on now?
None other than the one and only Kenny Hit the Bid Glick. All right. Bring him on. We need an intro.
We're going live already. Oh, what's up? What's up? I didn't know. I was about to get up.
Oh, did you want to wait till I saw you? I saw you in the green room, so I wanted to bring. What do you got on your cappy?
That's my crown. That's my crown. I was awarded the king of all trading yesterday while navigating the most volatile day of the year. Man, what from a distance it looked like it was pretty crazy, but when you were in the nucleus of the market yesterday, the weather was fine. It was one of the greatest days we had of the year.
And I bet you I know why. Because you followed your VWAP.
Oh yeah. I mean, I'm just I'm a slave to it at this point. I have suspended my idea that I know anything about the stock market, and it was like a therapeutic moment for me. And I realized, you know what? I'm just going to let the market tell me what to do, and I'm not going to have any opinions whatsoever because my opinions stink. You don't want to know my opinion. But I've been bearish the market, for about 18 months now. So I guess I was right about some stuff. But man, yesterday we were long after that massive chop, and we were long big. And once we started to roll over, I was like, listen, we're rolling over. I'm getting out of everything, and I think I might go short. And we stayed short right into the close. It was glorious.
That's
what
that
all
is
that on the charts.
That's the trick. To be able to to be able to turn, to take a long, turn it in, take the long, because there's always that regret, like, oh, why didn't I hold on to the long, and now I'm losing money on the short. But
Right.
it could be, hey, if it's good enough to sell a long, why not, why not use it as a short? So what's on your radar for today, Kenny?
Same thing. I'm watching the Qs. I'm watching volatility index. I got a couple of the KBH and Lennar reported earnings. Got a couple of worthless IPOs because my God, I have not seen more worthless IPOs brought to the market in any year. And I've been watching the market for 30 years. It's like they're trying to rob people. Oh wait, they are. I mean, these Chinese IPOs, they brought in a Chinese education company. Wait a minute. 2 years ago, didn't they say those companies were fake? And then they brought one out. Did you see some of these stocks? $20 to 2,000, back to $2. I mean, people are
Which
getting
one?
annihilated.
Which
But
one's that?
you had JZ. You had obviously you guys know about HKD and AMTD. You have some absolute nightmares out there. But if you know how to trade these and you could short locate, wow. I mean, the utter destruction in some of these names. They haven't even been out for weeks, and they've already had thousands of percent moves up, but most of them are crashes on the way back down. But I'm staying riveted to the market right now, the S&P, the Qs, and I'm just going to see if there's any stability because June 17th's bottom, or otherwise known as the Josh Brown bottom, I think it's in sight. I think we're going to head back
It
down
is.
there.
Yeah.
And, we might be, flirting with that. And if we break that, the Qs could be looking at 250, a spot I didn't think we'd ever see again. But there's really not much support under that June low until 250 on the Qs. And then under 250, we're looking at 235. And then next thing you know, the whole pandemic bubble has been burst. Thank you, Goldman Sachs, for reminding us how we don't understand what bubbles are. And that's really why I've been short this whole time, because Goldman Sachs, if you guys Google Goldman Sachs, not a bubble, they spent over 8 months trying to convince us that the market wasn't in a bubble and that you needed to pile into the market on January 7th, 2022. Read the articles. They're hysterical. And now here Goldman Sachs is telling us it's going to get a lot worse. Oh, good for you. Thanks. So I've been going against everything Goldman has to say, and it's been working out pretty well. Obviously, I let it be validated by the VWAP, but man, it's been a great year to be in 100% cash. And I treat this whole thing like a video game and a casino because it is.
Is there any positives you can see here in this market?
Positives are these beautiful bear market rallies. I mean, they are awesome. That June 17th to August 9th or 10th was phenomenal. So on our way down, we have these beautiful tradable moments to the upside. Again, I'm all about cash. You're able to get 4% in a CD now, so I'm very excited. There's somewhere else to put your money right now. The government stepped away. Obviously, you've heard all this, diatribe already. The government's not supporting the stock market anymore, and you've got other places to put it. It's probably going to get worse before it gets better. But right now, trading is awesome. This is what I did in 1997, 98, 99, when day trading was born. I didn't think we'd have this moment again. I'm back. I'm a kid again. I feel like I'm 27, 28, strapped in at my desk, and just, the world is at my feet. The opportunity to make money is amazing. You just need to have a little skill set and stay focused.
Yeah, and then take your licking, if things aren't you're going your way. Just going back to like the June low and stuff. I haven't heard too many people, say what you said. And I think, they're looking, oh well, we retest the June low and then, finish it all new all-time highs for the year. I don't want to go back down to that June low. I mean, if that somehow, some way, to catch a bid and stay above, to me, because I just think it's just too big of a target. And I think people will really totally give up on the market if we take that up. I mean, I think there's still not as much a buy the dip mentality. Definitely, people have been shaken by it just a tad. But that's my opinion. I was hoping for the expiration low to hold. The September quad witch expiration, and you just when those things don't work out, you just got to go with it. So if we're taking the direction from that expiration for the next 3 months, Santa Claus not exactly going to be coming to town, and
Right.
yeah. So All right. Anything else? I mean, you talked about the IPOs. You should listen to our show from yesterday. We had Eric Kroll on from the Life Cycle Trade, and he showed us the way just even the new IPOs are just falling off the market.
It's
And
awful.
then showed us. But just one thing before I let you go.
Yeah, man.
What about these growth stocks? I mean, here's the market coming down, and we'll just use Kathy here, ARKK, dentist, made the call, the May low. That was going to be the low for the year. Uh, I mean, it's getting hit. It did get up to 54. You got support here at 40. Do you think this is trading range stocks? You think there's another major leg lower in these growth stocks? And just general opinion here with just looking at this ARKK.
I don't think ARK's going to hit a bottom until they run this woman out of the industry with pitchforks and torches. So yeah, I wouldn't go near it. She keeps thinking some of these companies are disruptive. Wake up, wake up. She was a product of momentum trading. You don't invest in momentum. Teladoc's not coming back. Sorry, Zoom is done. And Zoom might be going to zero because somebody's going to come along and make it better, faster, and less dropouts. You never know which one of these companies is going to stay in business. Again, everybody thought Peloton was a real company at one point. Oh, they introduced rowers now. Yeah, that's going to help. They have billions of dollars in inventory. Anyway, I'm not a fan. I'm not a fan of Kathy Wood or anything that she has anything involved in her portfolio. When the market comes back, I'm going right to the source. QQQ is where I'll be.
Okay.
But I'm not looking to buy this dip yet. There will be a time, again, and I don't think it's going to be this year. And I don't think we're going to see again. There's no way. And I'm going to stick to this, 408, that 408, 412. I'm thinking those are highs for the next 2 years, maybe 3 years. I think the NASDAQ is broken finally. And the idea of those V bottoms that check mark all the way to new highs, we're not going to have it. But if we do, and I'm wrong, I'll just join in like the rest of us. Most people like to buy stocks when they're going up. I'm not trying to pick a bottom here. I have no shame or I have no ego involved here. If we start to rally, strap in, kids. Let's go for a ride. And we'll be going back up. But right now, cash is king. Every day you've got 3 or 4 biotech stocks that are up hundreds of percent. Those have been fun to trade. Like I said, I've gone back to being a complete day trader, looking at this market as just a casino. And when you look at it from that viewpoint and you're using volume weighted average price, you almost have the rigging of the casino. It's like I'm counting cards. I got only 3 numbers to choose from on the roulette wheel, and the oxygen's pumping in, and there's a free show, and this woman's pretending that she likes me, and I'm thinking that she might be looking for some cash. So, I'm having a good time, and I'm wearing a crown. So,
all right, the king of the markets, Kenny Glick, king of Wall Street, joining us here on pre-market prep. I'm glad I dialed you up, and Triple D's out, not feeling well. So,
man.
yeah, we got to get him back. But we'll get you on again soon. Go out there, go get him, and as always, thanks for coming on. Thanks for coming on with the late notice, Kenny Glick.
Hell yeah, call me, man. If you're free tonight, give me a call. We're having that party on my website. All right.
Okay. All right.
All right.
There
Thanks
we
a lot,
go.
Joe.
Okay. All right. Little distraction there, but let's get back to some ticker time here. And boom. The ticker time. Adnan says, "Hey Joel, I'm stuck in Dish at 1641. Thought on an exit for the day or the week." All right. Nail this down. Let's take a look at Dish. Well, you're not too far underwater here at 1641. First things first, that is 16. First things first, I mean, you want to see today's low hold. Obviously after that kind of day, only trading out 7 cents. So I think if you take out this 16, with the vengeance and stay there, the first 5-10 minute bracket, I think it's time to hit the exit button. If you're looking for a rally and you're hoping to get out of this thing, you have 2 highs in the same area at 1675 and 1681. sure doesn't feel like it has the gas to get there today. So I would lower my expectation for that, for the seeing those two levels today. I don't know. Maybe you get one big buyer come in. Maybe you could get a scratch on that at 1640, 1641. But bad day yesterday. Important that it holds support and gets back up. It gets back to 1680. I think it will 1675, 1680. I think it will at least pause there the first time. So that is taking a look at Dish. What else did I see here in the chat? I saw cake. That is same kind of formation. Bad day yesterday. We held the prior day's low. I guess we could get a little bit fancier with this one. And if you want to try to be stay bullish this one, even though they're you know what they need to do? They just need to make their portions a lot smaller and still charge the same amount of money. But your last rally here emanated from the lower 29 handle, got just over 34, and now you've given back half of this move. So what I'd be looking for over the next couple days here is to find a bid in this area and prove to me that that you had the break here, the rally, another break, that they're going to buy the break here and take it back up. So that's at least looking for it to stabilize here. Or at least stop going down. But bad day yesterday for cake. J Wall, I did cover Costco already, but I'll do it again real quick. Of course, they report after the close. And I think it's pretty simple on this one. You got it 493 is good enough support for me. If it breaks 493, I would get the heck out of the way. If they like to report or the market has a good day today, there is a pair of highs, actually a trio of highs at the 506.50 area. That is three out of your last four highs, including yesterday's session. So that's the resistance. And what else can I give you? Of course, after being up $2.42, settled right near the low. So you got the low and the close right there at the same area. Makes it a little bit better number. If you want to wiggle out ahead of the report, like I'm sure a lot of people do that have gotten caught in this downturn, the mark from Tuesday was 499.52. So that's an area where if you don't think it's getting to that 506 today, that's the other area that I would take a look at for you. What else do we have? I'm going to go back up to the tickers, and what else do we have? Got the Costco. We did the cake. Let me scroll up here. We got a DXY trader being very active. I'd keep an eye on that high from yesterday in the future. That's up 1240. That's really the only thing I have. 111.58. It's trading up a dime right now. Man, it's so hard with three decimals. But keep an eye on that close, the close and the low. That was like that 110.22. If you're just trying to protect profits, that's like the highest low this thing has made, and I don't know how long. Roberto Wilco is asking about Yum C and then Nike. So let's go to Yum. I think that's Yum China Holdings. Quiet here. They must still be eating that Taco Bell, Pizza Hut, and Kentucky Fried Chicken over there in China. You have three lows, kind of in the same area. You did breach it a little bit yesterday. You're not getting away from it. 48.75 was the low from yesterday. You also had really nothing else in that area. So next stopping point on the downside would be 48.75. Flat on the session. Doesn't look like got a big rally going in here, but over the next couple days, I would look in a rally. 49.74, 49.89. was your close yesterday. So that was the mark. I'm sure a lot of people would like to see that. And that was evidenced by the trading action yesterday when you had a high at 49.74. Imagine RX is asking about Nike shares of Nike NKE. Oh, he mentioned not breaching 100. We breached 100. Bad day yesterday for Nike. Someone got it going with the downgrade a couple days ago. And then, you just had a bad market yesterday. 99 closed right near the low. You're trading up 99. What are you trading up? 77 cents and 100.56. I mean, you can think that that's the bottom. Wait, what was your low here? Your low in July was 99.53. So I'll make that a 3-star. And what you want to see is if someone really wants to own this stock. I think they report a little bit later. You're gonna, you get 100. Someone's gonna build some support. Buying it 100. It's gonna take a couple days. Doesn't look like we're, you may see it today the way the market's rolling over. But after that, what do you have for your next monthly low? I think if you cut through that enough and get enough closes off triple digits, below triple digits, you'll be looking at your August 2020 low. That comes in at 96.55. So there is a detailed look at Nike. Let me move over screens here to see if we got any other. Keith Smith is asking about Beyond Meat, and let's see. That's going to be a tough one to take a look at. Came back down to yesterday's low, and let me get the pre-market chart in here. I'm still cracking up about that guy's biting someone's nose. I mean, that's just ridiculous. But let me get the chart in here, and boom, 1590. I mean, lows from yesterday trading up 15 cents. Two lows, 1577, 1597. Maybe a patient buyer here at 16, the low close of the move, 1590. So let's stop going down. Maybe build some support here. New old time low for the fake meat. A rally. What would you need on a rally on this one? You're probably not going to see yesterday's high of 1791. I think I'd look for an intermediate if you're looking for a pop here. Your close on Tuesday came in at 1706. Boom, boom, boom. Why the banks keep going down is because we're going into a recession, and people aren't going to be borrowing money. And then I think also people may be a little bit more, delinquent on their, some of their payments. What kind of bad debt do these banks have on their balance sheet? And we haven't heard really much about any Russian contagion yet, right? For exposures. So yeah, that's right. The banks are they're just. I don't know if the bad loans are baked in, but it's just not a favorable environment. And looking at the trading ranges, they all look like they're about to melt down. For the Bank of America, you've had this area for a long time. This consolidation area. I really don't see any. It's trading up 9 cents today, but your major support, three lows in the same area. That comes in at the 32.60 area. Okay, so we're going to try and rip through these, and then we're going to wrap things up here on this Thursday. Back red again, down to 3 3/4 handles, 3.5 handles at 02.75, and must hold 90 for PayPal. I mean, there you go. That you did get the gap fill. I would high in that day right there. Got to hold 90, down 19 cents. I don't care about this low if it takes out 90, but must hold there for PayPal. Green candle last month, not so. If you're looking for a little rally today, your 2-day close. Well, first you want to get, if you think this thing's going to rally, you want to see the close at 91.18. but then you got another daily close at 91.63. Uh, Johan asking about Tesla. Finally, a little chink in the armor, been holding up relative strength. This is the first big red candle you've had in quite some time. Keeping an eye on that low from yesterday, 300. Next good support level, if this really starts to roll over, doesn't come down until the lower 290 handle. And if you're looking for a pop here to sell in any kind of strength, 873, 308.73. That was the high in yesterday's session. For the SPY, it's the same with the SPOO. Is man, you just got to hold the close. And we've already traded through it several thousand times. And now we're in the red going into the open. So new low for the move yesterday, new closing low for the move by a wide margin. So things are not looking well. And as far as daily support goes, I have nothing. I had it on my sheet. It was from July. There's nothing there until like 37.40. Let's see how that corresponds with the SPY. Yeah, there's a gap there. I don't really care about that. But I'm talking about this low right here. The next daily low, your July 14th low, that comes in at 371.04. So that's what I'm looking at for the SPY. Couple more here before I take a breath. Boom, boom, boom. Poshmark, I believe, is that stock. Bad day yesterday, up a couple pennies. Must hold area for this one comes in at 1360. I see two exact lows there. 1373, the low yesterday. I think if you knock that out, this is not a huge mover, but 1328. There's only one daily low there, and then you slip under to the $13. Coming back on the upside, if you're looking to wiggle out here, yesterday's close would be a 1405. Not yesterday's close. What I'm looking at for the close in these stocks is the close from 2 days ago, and that comes in at 1405. So you may get a look at that on a rally, still holding a majority of the gains. DHR, they've already reported. We can just check these home builders real quick. DHR trading up 92 cents, but nowhere near yesterday's high. What's your close on this one? First resistance point I'd be looking at would be 74.37. And then this is important. Boy, these are tricky when they come down to these gap areas and they hold, and then eventually they don't hold. So leaning kind of heavy here on the chart. You can't really call any support in this if you get a sustained offer below 267. No support down to 260.90. Let's see, Jorge. Foot Locker. I was wondering how old Foot Locker held up. That Nike news, didn't knock it down as much as you'd think. But hanging on here after the earnings gap up. It has been pretty much a fade off the earnings for the gap. But right now, I'd be hanging my head on that 37.06. That is the low going back. That's your 6-day low. Underneath that, I have nothing to you till 36. If you're looking to sell this thing into any kind of strength, double close area, 37.58 and 37.54. So let's see if I got any more tickers here. If not, I'm gonna wrap things up here. Let's all send good wishes to Triple D. Hope that he gets better real soon. Oh, my buddy BNZNB is asking about CSX. That will be our final stock of the day. CSX, the railroad, got to hold 29. I mean, there you are. And you close the low of the session, and you're not getting away from it. Closing low. Also, the 2-day low in that area. Yeah, I see the 28.90 low is, that's real close to it. But for the most part, I think you can get momentum down through 29. you could be looking at least, let's see here. I'll give you another low at 28.57. I'd be more interested in a gap fill in this issue. If it could get down, what was that gap area? Oh, I guess it was. There's only a 30-cent gap, maybe on the cheap here at 28.29. And if if you don't want to get into this thing until it shows some profit or some strength, got to get above $30. So big shout out to Aaron Thomas here, filling in as producer. Big shout out to our guest, Blue Putnam from the CME. Also, Kenny Glick popping in. And boom, boom, boom. Let's see here. Who else did we? Oh, Christian. Got to thank Christian Fromheads for very aptly filling in for Triple D. Please like the video, and if you haven't already subscribed to Pre-Market Prep channel, please do that as soon as possible. Joel signing out. We'll be back on the Pre-Market Prep